Hello everyone, it's on side. Welcome to another teachings. If you're still losing trades, it might not be because your strategy is bad. It might be because you're missing these 5 markets concepts that I'm about to talk about. Alright, let's get straight into it. The first one on my list is market structure. Market structure is the foundation for every trader. If you want to analyze technically, you need to understand market structure. You need to be able to identify and mark the correct structure of the market. How do these help you? It helps you to know the trend. And by knowing the trend, you already know the buyers and the draw liquidity. All these 3 words are the same thing. The trend, the buyers, the draw liquidity, they're the same thing. If you're able to mark the market structure correctly, you will know the trend, the buyers, the directional buyers. And knowing the directional buyers is one hurdle that many traders face. Alright, being able to mark the right break of structure and not a failed swing you mark as a break of structure, or a liquidated swing you mark as a break of structure. Understand, study the market structure and how to mark it correctly will help you to know the trend. And by knowing the trend, you are on your way to a correct and a very good technical analysis, right? And the second on my list would be, I'm just going to type it, daily range. The daily range is very, very important for understanding. If you're able to market structure very well, then we have, a daily range that we're going to work with, right? Because the daily range helps you to divide the specific range you are looking to trade away from. It helps you to divide it into a premium and a discount, right? If we have an identified daily range that we want to trade away from, mark it with our gun box. We have our premium and our discount. The premium is the high prices and the discount is the low prices, right? So marking out the correct structure and gives you the understanding of the better level of daily range to work with. And once you have a better daily range to work with, a correct daily range that you got from marking the structure right, then you can have a better place to look out for, a zone rather to look out for, to trade away from, or to even anticipate markets to draw to, right? And then the third one on the list for me is liquidity. Liquidity. It's simply money, all right? Liquidity is money, but on the chart here, liquidity is old highs and old lows, basically, right? We believe their liquidities above old highs and liquidities below old lows, and the liquidity are in form of pending orders or stop losses. All right, the liquidity are in form of pending orders or stop losses. Okay, so by understanding these concepts and knowing it in depth, knowing high probability old highs and old lows that liquidity is residing, it's a very, very important thing for a trader, because it helps you to know where market is likely to draw to, because the markets actually draw to areas of liquidity, areas where there are pending orders, areas where there are stop losses. All right, knowing this concept is very, very key as a trader for you to know. And the fourth one on my list is fair value gap. Fair value gap. The fair value gap is an inefficiency in the market that markets will always reprice to balance, right? It's called inefficiency, fair value gap, or FVG. It can also be called imbalance. Fair value gap is a space or a gap that the market leaves, then it comes back to fill it, right? So if market we could have a fair value gap, a bullish fair value gap, a bearish fair value gap. A bullish fair value gap is when the market offers buy side and did not offer a sell side, right? That's a gap. A bearish fair value gap is when the market offers a sell side but didn't come back or reprice into the gap, right? So there's a better understanding on this if I get to make a personal video on fair value gap. I can actually make a better explanation on that. And I'm very sure many of us have seen it. We know what it means and what it simply is. So this concept is very, very important to focus on as a struggling trader. All right, you need to focus on fair value gaps because they are very, very important concept in the market that we need to look out for if we want to reduce our losing trades. In fact, you can't even be a trader without knowing what fair value gap is or without using fair value gap. Well, I think I'm right to say that there is fair value gap in the market and we see retracing. But if you want to reduce your losses drastically, then you need to focus on fair value gaps. And the last one on my list would be key levels. Key levels, right? Key levels are levels where market draw to and also trade away from, right? As a key level, it could be a breaker block, another block. In fact, fair value gaps sometimes, or let me say, fair value gaps in itself can also be a key level, right? Because it attracts market and also market can trade away from it. So key levels are very important. Learn what it means and learn the types of key levels that we have. I just mentioned some. We have order block, we have breaker block, we have fair value gap in itself as a key level. And again, there are mitigation blocks, rejection blocks, a whole lot of blocks, right? But you can just basically focus on other blocks, fair value gaps, and probably breaker blocks as well. So these are the 5 important concepts that you should focus on as a trader, as a beginner trader, a struggling trader. You should focus on these 5 concepts. If you focus on these 5 concepts, you will see your losing trades reduce drastically. And study them in this sequence because I took my time to observe and to see how this thing works. Then I put it in this sequence for you to benefit from, right? So do not just learn them and scatter it, okay? Just learn it in this sequence and you watch how your losing trades reduces by knowing the right structure. Helps you to identify the daily range to work with. Within the daily range, you can look for liquidity to be grabbed, inefficiencies to be filled, and key levels to be reached for. Then you can trade away from that. So in this sequence, it will help you. And if you find these teachings educating, you can as well like, subscribe, and comment in the comment section. All right, until next time, keep trading on the right side.